Good morning. You're watching Ask Profit, a show where we'll take all your stock market related queries and get them answered by our fundamental and technical guests. I'm Smriti Chaudhary and with me is Mathew. And today with us, we have Rahul Sharma of Equity 99 and Sneha Podar of Motilal Oswal Financial Securities. You can ask all your questions to our guests today, and you can write to us on any of our social media channels or through the WhatsApp number that's on your screen right now. You can also write to us on the YouTube live chat. Now, before we dive into the questions, Alex, how are the markets faring at this juncture?
Well, it's been a significant chop and churn, and good morning to everybody as well as to our experts for the day. It's been considerable chop and churn, and we were expecting there to be a little bit of consolidation today, and that's essentially how we're seeing things play out today. So you have the benchmark Nifty 50 that's trading not too far away from the low point of the day, down about 0.4%, and you have the broader markets that are more or less moving along those same lines. So you have the mid-cap 150 index that's down about 0.5% or thereabouts, and you have the small-cap index that's seeing cuts of about 0.33% or so. In fact, let's also pull up the market breadth, and the advanced decline ratio should give you a bit of a sense of how the texture of the market is this morning. There is understandably a little bit of caution that is playing out not just in our market but global markets as well. Some of the run-up that you've seen in risk assets has turned around, and you have the bond yields in the US that have gone up quite substantially, now trending above 4% for the 10-year. So there is a little bit of caution in the Asian markets as well. Among the key indices and key sectors to watch out for, you have underperformance by the FMCG counters, and we'll talk about a few of them. You also have PSU banks that are down about 1.4% or thereabouts. You have IT ahead of the major results at the end of the week as trading with weakness, down about 1% or so. The ones that are bucking the trend, you have the realty index that's up about 0.8%. A few very good numbers coming out from the quarterly updates for a few of the real estate companies, and Soba, for example, is doing particularly well. DLF is also up over 1% right now. But let's focus in on the FMCG companies that I was talking about, and a couple of them, we're focusing on GCPL as well as Marico in our focus segment today on the back of quarterly numbers. Smriti, what can you tell us about them?
Well, we saw weaker than expected numbers this time as well, so that trend continues. Now, Marico also reported domestic volumes in single digits, the growth in single digits. However, international business did slightly better than the domestic one. A couple of brokerages came out with their target prices, and they do see the GPM expansion to remain strong on a year-on-year basis due to continued softness in certain commodities like copra edible oil for Marico. For Godrej Consumer, now it was better than Marico, but very weak numbers there, and because of that we're seeing a downtick in both the stocks. Both are down about 4%. Now, we've seen these weaker numbers in the last couple of quarters. Sneha, good morning. I'd like to understand from you, how long will this trajectory continue of weaker numbers, and when can we expect some probably better results from these big companies?
A very good morning. So basically, one of the major factor which has really impacted the earnings for the consumer companies is the rural demand. So while the urban demand is still quite decent, the rural demand has not really shown any pickup. It was anticipated that it would pick up from Q3 onwards, but the quarterly updates shows that the demand has continued to remain weak. There are now hopes that with the elections due in May, probably it should provide some push up to the rural recovery. So probably Q4 might see some pickup in demand. But it's all hopes because even in Q3 there was a miss despite the state elections being there in November. So the otherwise, apart from the demand front, the margins have shown uptick with the softening of the raw material prices. So it's the only dampener currently is a rural demand, which really needs to pick up, and it's anybody's guess. The government is taking all these steps to provide further subsidies and to the farmers and to the rural economy. So hopefully things should derive in Q4 onwards.
All right. So that's the view on, but specifically just to follow that up, any picks in the space, because this is something that is being seen as a weakness across the board. In this context, would you suggest a fresh entry in any of the names that you're watching in the FMCG space?
So in this context, I would suggest Tata Consumer, wherein the dependency on rural demand is quite less, and the way the company is strategizing the entire growth plans for the company, it's really impressive. So they already have tea and salt, which is a cash cow business, and now the focus is completely on the other segments like the spices and the pulses and everything, which they really want to scale it up to a very to a large extent, and they're in cashing on the distribution channel that they already have through tea and salt. So using that distribution channel as well as using the online platform, they have really gained market share tremendously in a very short span of time in these verticals. So the growth should continue to be robust for Tata Consumer over next few years, and we are quite confident on the company.
And the stock has in fact gained quite substantially, as you see on your screen, in both the 1 month and the 3 month period. Let's jump straight into our questions now, and we've got several that have already come in. Just a quick reminder, if you are tuning in right now, you can send your questions to us on that WhatsApp number on your screen, as well as on the YouTube channel, which we are monitoring right now. But the first question we're taking is from Mohit, who is writing in from Ludhiana, and he's asking about Yes Bank. He's bought 1,500 shares at a price of 13.6 rupees per share. The stock is currently trading at 23.65. He's got an outlook for the next 1 year. So I will go across on the technicals to Rahul. Rahul, what are the key levels that you're monitoring right now? Would you suggest that it's a good idea to take some money off the table at these levels?
Well, very good morning to all of you. See, as far as the Yes Bank is concerned, I think the stock has given really good performance to him, as he has taken the position near 13 levels. Now it is trading above 23. So congratulations to you, first of all, because you have made like really good money in this particular stock. I think there is a major resistance near 25 zone. So you might wait for another 1.5 rupee gain. But I think you have to wait and watch on a very strict basis the 25 levels on Yes Bank, because there is a major resistance. We have seen it in past also. So it might get some correction after reaching 25, where I think you should take some partial profit booking in your position, because you have already turned up this investment in a really good manner. So I think some partial booking would be like really beneficial to you to take some profits in the pocket at this particular point of the market. Will be a good decision. Then you can wait out for further more in coming days. The good support which is available on the charts of Yes Bank is near 21 levels. So I think with the stop loss of 21, you should carry on your position and also do partial profit booking at this point of time.
Right. Next one, we have a question from Naresh Thakur. He's talking about Castrol India. He says he's bought shares at an average price of 170. Now, he says that the stock touched 195 levels, but is under a little bit of pressure today and is trading around 184 currently. Now, Rahul, I'd like to understand this from you. Now, we've seen a little bit of a breakout in this stock in the last month, which is December. It was below 160, 140, 160 in that range, trading for the last couple of years. But in December, it had a breakout, crossed 160 levels. What do you see from here? Should he book profits right now, get out of the stock, or should he maybe wait, hold on to it for some more time?
Definitely we have seen really good action in the December month, especially after the mid-December. And the rally was really good, and it has given breakout. And also the formation on current charts is looking like a flag pattern. But you have to keep a strict stop loss at around 176 levels, which is like good support. If at all it breaks 176 on the downside, I think it can go back to the levels where it was consolidating earlier near 150. So keep a strict stop loss at 176 and keep your position up. And on the upside, I think as soon as it crosses 190 or 192 levels, you will see another breakout which can take this stock to 200 plus levels. So I think keeping a strict stop loss at 176 will be a good idea to carry your position.
Understood. All right. I'm going to take a question on GMR Airports in front. This one's from Geeta, she's writing in. I will take a question on the fundamentals. Sneha, this is a stock that we've seen in focus, and in fact, it's up as much as 4.5% today as well on several updates, right? But would you recommend a fresh entry at this point, and till what levels would you accumulate this stock is a question coming in from Geeta. Her horizon is as much as 3 to 5 years.
Okay. So see, basically, if you check out the GMR journey, the journey has been really good for the company. It has created a bouquet of almost more than 9 airports, and the kind of tie-ups that the strategic types that they are entering with the international airports as well. So that would kind of ensure good revenue growth for the company. And moreover, given the buoyancy that we have seen over the last few years, and it's still continuing in the overall travel and tourism, so that should continue the momentum for the company. And given the positive news flows that we have seen so far recently, and plus given the new plans that the company has with regards to, say, non-aero revenue streams, or some of the other similar duty-free models that they wish to adopt. So all these would further add momentum to the current buoyancy that is ongoing. So we are quite optimistic on the company, though we do not have any official coverage. But I believe that one can definitely one can definitely hold on to this stock, and probably it can go up to 100 plus levels.
All right. Next up, we're talking about Tata Motors. This question is from Ankur Patel. He's writing in from Ahmedabad. Now, we've seen Tata Motors being the only stock in the Nifty 50 index that doubled in 2020 from 2023. Now, is it still a good buy at this level, Sneha? Would you still recommend entering the stock?
Definitely, because if we recently the JLR number got announced, I mean, they have been really stellar numbers, and given the company's plans with regards to the whole EV business is really impressive. So I would say all its verticals are doing really well. And one should definitely can consider even at these levels, because the valuation wise it's still at a very attractive levels. So definitely hold from a long term point of view, and probably if the investor is a long term investor, then he can definitely see 1,000 plus levels in a year's time.
Got it. The next question is on Adani Enterprises. We've got a question coming in from Sanjana Gupta. She's asking for a short-term view, and I will come to you on the charts, Rahul. It's trading about 3,000 levels. Should she buy at these levels is the question for the short term.
See, Alex, I think she should wait furthermore. I think there is some decline which will be witnessed in coming session if at all market doesn't support. Although the good entry point, in my view, would be around 2870, 2890 levels, which will be a fair point to enter in this stock. I think there is a good support which is available at 2800. So the risk to reward ratio will be better if we trade if we pick the trade near 2870 or 2890 levels. On the upside, I think there is a major hurdle which is placed at around 3075. If till the time it doesn't crosses this level, I think some more sideways move or minor correction will be seen, although the chart structure are positive and I think it should perform. But the entry point would be really good if at all you enter near 2870 or 2890 levels.
All right. Thanks so much for that view. Just a standard disclosure on any Adani related conversations. This is a group or the NDTV group is owned by AMG, which is part of the Adani group. We have to slip into a very quick break. We've got more questions lined up on the other side, so do stay tuned.
Welcome back. You're watching Ask Profit. Now let's dive into the queries again. Next one is on Paytm. Now, a very interesting counter Paytm has been. We have, I don't know the name of the viewer, but Premlata. We have Premlata writing in on Paytm. He bought the stock probably during the IPO phase, and he bought it around 2000 levels. Should he continue holding the stock? Now, we've seen certain brokerages come out with their picks, and Paytm has been one of them for 2024. Rahul, what views do you have on Paytm? How do you see it going from here on?
See, definitely, if the position is from the IPO time, then there would be like larger pain. And many point came in the market where the average was suitable. Although now also she can average out the position near 700 levels. But on the upside, where the major juncture of moving averages is there between 770 and 800 levels, there we might see some resistance. And I think till the time we don't cross 780 or might be 800 levels on weekly basis, there will be some kind of a sideways move or major consolidation. But on the downside, I think 600 levels has given us good support in the past, where the stock was declining, and near the mid December, we have seen that this stock has taken strong base near 600 levels. So I think she can average out the position to get the better average price. And as soon as it crosses 800 levels on the weekly basis, then there we can see some more positive stick-in coming on the technical charts. So I think she should wait more. That already you have given so much time to the stock, so you should average it on the current levels and wait for the upside ticks above 100.
Very quick view, follow up on this. Rahul, somebody who's bought, Barveen has bought at levels of 706, same stock. What advice would you give to him?
I think she should hold on the position. We have seen 600 levels to act as a good support. So keeping strict stop loss at 600 levels should be a good decision here, and she should wait out more. And as said, 800 levels will be the resistance. As soon as we get closing on the weekly basis above 800, the stock should move towards 1000 plus levels.
Okay, Sneha, this one's for you. We've got a company called Bajaj Projects, which apparently has been demerged from Bajaj Electricals. We've got a viewer tuning in from Varanasi, Akshay, who's bought 100 shares at levels of 12.91. The stock is now trading in triple digits. Do you have any specific view on the fundamentals? If not, what advice can you give broadly on the space that it plays in?
It would be very difficult to give a view because I haven't really looked into it.
Okay, fair point. Let me try and get you a technical view, even though I must point out, Rahul, that Akshay has a 3 to 5 year view and he's already making multi-bagger returns on this one. What should the advice be?
I think if you're making multiple returns, you should take some profit booking here, because this market scenario may turn out in coming future to be in some kind of consolidation or minor correction. So keeping that in mind, I think you should take some partial profit booking here.
Right. Next up, we have a question from GC Prakash K. He has written to us on YouTube and he's talking about two counters. Birlasoft that he bought at 315 levels and Bharat Forge that he bought at 746 levels. Rahul, on these two counters, hold or sell at this juncture?
I think both the counters deserve hold here, especially Birlasoft, which has given tremendous performance in past year. I think there is some kind of consolidation which we can see from past 10 sessions. But there is a good base which stock has formed near 680 levels, which should act as a strong support. So keeping that in mind, you should continue your investment journey. As soon as it travels beyond 740 levels, I think there will be a breakout on the technical charts, which will turn out that Birlasoft may travel above 800 in coming days. So keep your position on hold. And similarly on Bharat Forge, I'm quite bullish on the stock. It has given good performance and there is continuous high top, higher bottom formation on the technical charts, and there is no reversal which we can see. And the indicators like RSI and MACD are also in favor. So I think you should continue your position, keeping strict stop loss at 1200 rupees level for Bharat Forge.
Okay. We've got a question coming in from Surya. He's writing in from Bengaluru. And he has said that this program is useful. Thank you so much for your kind words. And I'm sure that the team will take this as positive to bring you a lot more in the future as well. He's got a specific question on NHPC. And I'm coming to you on the fundamentals for this one, Sneha. He's bought at levels of 55. So he's already making some gains, but he's planning to hold for the next 3 to 5 years. Please guide on potential for revenue growth and EPS growth as it is, he's saying, in his view, based on his research, is kind of low right now.
Okay, definitely. His analysis has been quite on the right path. So basically, the company has got huge potential. The revenue potential is multifold, not only for NHPC but even the other power companies. So recently, if you have seen, the power demand has been at its peak, and it's going to further accelerate with the capex intensity picking up. And secondly, the recent news flows, if you watch out for the companies, has been constantly signing MOUs with various states. So that would further, keep the demand momentum ongoing. The valuations at the current levels, despite the strong up move, is still at very attractive levels. So definitely, one can hold on from a very long-term perspective.
All right. Next up, we have a question from Rajesh, and he's writing from Chennai. He is talking about two power stock, REC and PFC. Sneha, we saw a little bit of a downturn in these two counters when these new power tariff norms came out last week. But quite a profit there because they bought the stock at around 120 levels. Should they continue holding these stocks?
They should definitely continue holding the stocks because the impact of that increase in power tariff was a short-term impact. And if we look at the potential for these companies, as I mentioned, the power demand is at its peak and it's going to further accelerate. So obviously, these lending companies would benefit, as the central government has also given them the mandates.
Okay, I think we might just be having a bit of an issue. Sneha, you were saying something about REC PFC? Okay, I think we might have lost that feed. We will get back to Sneha once she gets back to us on PFC REC. The next question I will take is from Abhishek Kore, writing in from Solapur. And Rahul, I'll come to you on the charts because he wants to buy Trident at the current level for a period of 1 month. What's the advice that you would give?
We have seen really good consolidation in Trident, particularly, and this particular week, I think today also this stock is up by around 13% odd. I think this is a breakout after a long period, which we have seen in this particular stock. So I think in coming month also it should perform if the market supports. The good support levels, which he should definitely keep in the mind, will be at 37 or 36, which is a strong base. So keeping that, he can definitely carry out the position. I think the breakout, which is available on weekly charts, should turn out, and this particular stock has got good potential to reach around 56 to 60 levels, which will be the targets. So I think definitely Trident is a good option to keep it in a 1 month time frame.
Right. We have Sneha back with us. Sneha, you were talking about REC and PFC. Please continue.
Yeah, so as I mentioned, the power demand is at its peak. So obviously, these lending companies would benefit. Moreover, the central government has also offered loans to the states to push reforms in the power sector. So, though there's a short-term impact from the increase in the tariffs, the long-term picture clearly remains quite positive. Both for the power generators and also for the power lending companies. So REC, PFC, after sharp run up, there was a little consolidation that is ongoing, but the long term view remains intact.
All right, and that brings us to the end of this particular edition of Ask Profit. To both Sneha as well as Rahul, thank you so much for joining in and answering all the questions that you did. And viewers, we hope that whatever was discussed on this show was beneficial to you. If we missed you out, it wasn't intentionally, and we will be back tomorrow to take all of your questions, so do tune in at that time. Lots more coming up over the course of the day from Smriti and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.